Gary Black just called out Stephen Mark Ryan on Twitter. You, of all people, should know stocks aren't priced on manufacturing capacity. They are priced on forecasted demand. This was in response to Stephen's tweet addressed to Gary, which had a little bit of a condescending tone, I think. Is that what you needed? Said Stephen Mark Ryan. This whole thing just turned into this fight. I like both of them and I respect both of them. At one point, Gary even called Stephen absurd. And I actually really liked how the fight ended. This is where it all started. Gary tweeted that the stock was down in the after hours, and he explained why he thinks it was down. He said that institutions get annoyed when Elon dismisses demand questions and insists that demand is infinite. To be clear, what Elon is saying is that demand is not infinite at current prices. What he is saying, it is infinite if we lower the prices enough. That's what institutional investors do not get. They do not believe, I think, that Tesla can really lower the prices by that much. And so this is where even someone like Gary Black, who is a long-term investor and who has been to dozens of investor days, says that the presentations were detailed about cost and production improvements, but didn't address the demand side of how to get to 20 million units. And he says that he calls them how he sees them. I respect that. But I strongly disagree with Gary's opinion here and will dissect that a little bit more. Stephen replied to Gary, Tesla just showed a new manufacturing system to have vehicle costs massively increase factory build speed and output. Did Tesla need to add a slide that says, if our EVs are 50% cheaper, tens of millions of people can afford them and will buy them? Is that what you needed? I sense a little bit of stop being a moron hidden in between the lines somewhere here. As you said, Stephen, it was focused on cost and manufacturing. It was short on detail on the demand side of the equation. It didn't answer how Tesla goes from 1.8 million to 20 million deliveries by 2030 by customer segment or model. It doesn't change my $370 price target. So this is what Gary is asking for. He wants to see the segments, the models, all the trims of each vehicle, because only then can you really put it in a model, supposedly, and see how much money will Tesla make. Farzad just jumped into the conversation and he has a very strong opinion. I'm convinced most institutional investors do not know how to think. The longer this is the case, the easier for retail to take advantage. Gary says blaming a declining stock price on investors not knowing how to think is never a winning investment strategy. The presentations only addressed half the equation, with sparse details on elements of demand to take deliveries from 1.8 million in 2023 to 20 million by 2030. Perhaps Gary took that a little bit personally, but Farzad clarifies, I'm not blaming it on the short-term move or a comment pointed at you. Just an observation about the long-term nature of Tesla and how most of Wall Street simply chooses to sideline it as pie in the sky. Farzad here actually makes sense. Stephen then fires back at Gary. I take Gary's point, but I'm not concerned what the stock market values Tesla. How far off the mark forecasts are, or whether Tesla spoon feeds analysts what they need to avoid doing so that they don't make mistakes, so that they don't need to think. Stephen continues, Tesla just showed how to unlock 20 million units of annual demand. 50% off. It sounds like Wall Street needs a table showing every vehicle model on this new platform, the cost to make it, the price they will sell for, and how many each model will sell. No thinking required, just copy and paste into a spreadsheet. And this is where Gary says Stephen is being absurd. Stephen then fires back, I'm just confused and trying to understand what details could Tesla have provided to explain how half-priced vehicles unlock demand for 20 million units per year. It seems self-evident, but obviously it's not. Help me understand. This is getting aggressive. Gary then explains how Tesla could have addressed demand-side issues. For example, provide information on pricing strategies and brand equity. Pricing strategies, I think Tesla explained that quite well. Reduce costs and reduce the pricing of the vehicles. And I think yesterday, Elon made it pretty clear what Tesla's brand is all about. We make the best vehicles at lowest prices, basically. And we will continue to innovate and lower costs to produce these vehicles, which will then lower the prices of these vehicles. So I think the point that Gary is making here is that the demand will not be a lot higher at lower prices. Gary, I really like you, but I think you're missing an important point here. We're going to dig deeper here. Here's share of the US market by revenue addressable by price point. And as you can see right now, Tesla, the cheapest model you can get is a little bit over $40,000 if you do not include the tax credit. So we are somewhere here. Tesla can only capture about 10%, maybe at best 20% of the market with current models. And with a $25,000 vehicle, we get to about 70%. But it seems that this explanation is not good enough for Gary. And then Steven fires back at Gary with Tesla's pricing strategies and segments and models. It is interesting, though, that Steven is quite bearish on the Semi. The sales projections are quite low. Steven is just trolling really hard with this one. Gary was at the event, by the way, and he saw Tesla's new manufacturing lines. They attend this thing in person and still can't see a whole new way to make cars while Ford and everyone else struggles with the first generation vehicles. Come on, why so hard, says this comment, and Gary fires back, I wasn't there. I saw that Tesla will have a whole new way of making cars, but that's only half of the equation. Why so hard for you? And I think Gary replies back to Steven about his spreadsheet. Although this is not directly to that tweet, but I think this is what he means. That's just a spreadsheet with numbers in it. It's not a demand analysis. And that tweet by itself, totally fine. I'm totally fine with it. And I like Gary and I respect Gary. I just want to say that first. There was this comment. Gary, you forecast Tesla will have 9.92 million unit deliveries in 2030. How do you show the demand for that? You can't. Can you? But you demand Tesla do that for a forecast of 20 million deliveries in 2030? No comment. This would be my position in terms of replying to Gary. Pause if you would like to read. And the fight continues. Are you suggesting investors should just accept what management says without doing their own research? Sorry, that's not how we roll. Steven replies, the opposite. I think investors should try to disprove everything Tesla says by doing their own research. I fully agree with Steven here. We know Tesla China, we can't trust them. Whatever they say, for example, there's not going to be a price cut. Boom! A few weeks later, there's a price cut. Tesla China said that they are not shutting down the factory even temporarily. And then, what happens? Tesla suspends production in Shanghai. This was in December. But when it comes to long-term deliveries, I trust Elon. Here's why. In 2014, Elon said Tesla will deliver 500,000 vehicles in 2020. Although he specifically said could sell. And of course, Tesla failed miserably by missing 450 deliveries for the year of 2020, and therefore we cannot trust anything that Elon says. That makes sense. To Wall Street, then Gary continues, you are accepting management's assertion of 20 million deliveries by 2030 by assuming management's assertion of a 50% price cut without any demand analysis. Steven says, I have never accepted anything management says. I try to disprove everything. This has been in my valuation model from day one. I have done the analysis on demand. Your numbers may differ. Today, Tesla showed how to unlock 15 million more vehicles to be sold with a half-price EV. And this is where I strongly push against Gary. Gary says 15 million, referring to these models here. You realize that two best-selling cars in the world today, Corolla and RAV4, sell 1.1 units each. I know Gary knows this, that he is arguing from analogy and that fundamentally that is likely to be very wrong. And I understand that he has to model it that way. But I look at the Model Y, which is a luxury vehicle. These two vehicles are not luxury vehicles. These are economy vehicles. And the Model Y is still ramping. You can get more than 2 Corollas for the price of a Model Y. We never had a luxury vehicle before sell so well. So we can't reason from analogy here. If anything, the analogy now is, oh, Tesla is selling so many luxury cars. Just imagine what will happen when Tesla introduces an economy car that will perform largely like a luxury vehicle that's fast and has good performance, good range, good features, nice screen, everything. Gary fires back, you know I respect you, Steven, but some things you say about how we just cut and paste what management feeds us and feed into spreadsheets is so far off the mark. Hold a mirror up. The respect is mutual, says Steven. You are one of the few people from the Wall Street world I really respect. The point I was making obnoxiously, to put it mildly, is that many of your colleagues are doing the wrong work and not thinking or unwilling to even think about the right things. Point taken, says Gary, going to bed now. Sadly, it appears that we might lose Gary. I'm going to take a break from Twitter for a bit, except for my subscribers, where I'll continue to post regularly. Tesla is still our top position. I didn't change my $370 price target. No change in our long-term thinking about the stock. I respect Gary a lot, and he makes some good arguments sometimes and has good insight. For example, he says that this is not a fair argument. Wall Street is not stupid. The frustration among investors is they didn't provide detail to back up their assertions. And what Gary is specifically saying is that Wall Street, and including himself, I think as well, they all want to see things happen first before they actually put the things in the spreadsheet. So for example, the robotaxi is not here, so therefore we will never put them into our spreadsheets until we actually have a working robotaxi. Once it happens, we will put them in the spreadsheets. Gary is smart. It's just a different investing philosophy. Gary invests based on things that already happened, and then once they happen, we can extrapolate these things into the future. But before they happen, we are not going to put them in the spreadsheets. Steven does the opposite. He sees, oh, okay, these things are obviously going to happen based on Tesla reducing costs by 50%. Obviously, there's going to be a whole lot more demand for Tesla vehicles. So I'm putting that into my spreadsheet already. Versus Wall Street, we're going to wait and see until Tesla actually starts selling these vehicles. And this is the Tesla stock buying opportunity explained by Elon Musk. My name is Matt Postius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.